Welcome back to ET Now. You're watching Markets at Noon with me, Kanishka Sarkar and Srishti Sharma. Well, it's time now to welcome our guest, Dikshit Mittal. He's the Senior Fund Manager of Equities at LIC Mutual Funds. Mr. Mittal, good afternoon to you. So great to have you. Let me start by asking you, what are you making of the market setup currently? The benchmark indices are holding up an uptick of 1% there. So what are you making of the market trend right now?
Yeah, so basically, markets have been in a range for the last 9-10 months. And during that time period, we have basically tried to discount many global events, global uncertainties, as well as domestic front. Also, some earning downgrades happened in the last 3 quarters. So to that extent, markets have been trying to digest all these things. And going forward, on a brighter note, Q4 season has been better than expectations. So at the start of the season, everyone was expecting that earning downgrade cycle will continue, but thankfully, there has not been many downgrades in this season. So that gives us hope that going forward, the earning downgrade are basically a thing of the past. So that should make the market much more reasonable going into next year. And on the valuation side, looking at the kind of valuation the bonds are trading at, because bond yields are continuously falling. And at the same time, after this consolidation phase, and also the ample liquidity that we have in the market. So that gives us hope that at least downside is capped at these levels, and upside will depend on the kind of earning trajectory that we see going into next year.
All right. Hi, very good morning. Good afternoon, I beg your pardon, Mr. Mittal. Give us some sense that sectorally, where are you finding margin of safety at this point in time? Though the markets are sensing them to be a bit of range bound, but sectorally, where are your biases?
Sectorally, we are bullish on industrials and capital goods sector. And within that also, the sectors or companies which are more exposed to the power generation, transmission and distribution sector. At the same time, companies who are into manufacturing and doing some kind of import replacement or electronic manufacturing. These are the sectors that we are betting on. And in terms of consumption, companies who are into catering to, you can say, upper middle class or affluent part of the Indian consumers, I think those companies should do well, and partially selectively on the domestic pharma that we're bullish on.
All right, Mr. Mittal, you just spoke about your preference for financials and industrials, and that also dominates your portfolios as we see. But what's your outlook on these for the rest of FY26, given you were just talking about how Q4 performance has been better than expectations? Are you looking to make any changes or any new sectors that you're looking to add to your portfolios?
Yeah, so coming to financials, we have been very selective. So in the recent results, we have seen many banks or many NBFCs have seen some pressure on the NIMs, and that can continue going into next 2 quarters also, because we are into the rate cut cycle. So they are basically liability tends to get priced in earlier than their assets. So basically, we are quite selective in the financials, but I think private financials as well as the NBFCs, which are into secured lending space, I think they should do relatively well next year. And industrials, as I mentioned, we are bullish selectively. Industrials, one is some of the companies who are export oriented, who are basically well entrenched in the global supply chains, as well as companies who are catering to power generation capex as well as the transmission distribution capex. So there we are bullish. And incrementally, we are looking to find some opportunities who are companies who are into manufacturing space, electronic manufacturing, or some of the contract manufacturing space. So I think these are the few sectors which we believe can do well over longer term, and we are looking to find some of the opportunities in these sectors.
All right, but Mr. Mittal, you just spoke about the domestic pharma companies. Within that, are you biased with the CDMO place? Because of late, though the generic companies have delivered an okay set, and there is uncertainty that still prevails with respect to the US outlook, but CDMO companies have done very well. But the other fact is that they have been trading a little higher. Given the growth outlook, the higher valuations, are they justified?
Yes, so we are more inclined towards the CDMO companies than the generic companies, because generics, there is a lot of pricing issues as well as some regulatory issues also in the US. So in the CDMO space, I agree that valuations are slightly more expensive, but there is large opportunity ahead of these companies, because India's market share globally in terms of contract manufacturing for the patented molecule manufacturing, I think is very, very low. So India has been trying to gain some of the supply chain shifts which are happening globally. So to that extent, market is trying to discount that the kind of scalability these companies have over the next 5 to 10 years. So we are on the lookout for these kind of opportunities, and companies who already have strong relations with the global innovators, who already are doing some kind of work with them, and there is high probability that incrementally more business can come to these companies over next 2 to 3 years as the supply chains get realigned. So to that extent, on structural basis, we are positive on this space, on the CDMO. And on domestic space, obviously, companies who are not supplying to the US but catering to the domestic consumer, I think those companies have much more stable earnings profile, much more stable growth profile, and margin profile is also quite strong. So to that extent, I think these are the two sectors in the pharma that we are bullish on.
Okay, okay. Mr. Mittal, you were just talking about just before this, you also mentioned that you see long-term scope in the power space, right? So I want, in that particular segment, within that space, I want to talk to you about the clean energy space. Just want to take your view over there, you know, especially what kind of impact do you see from the new US tax bill that, you know, just came last night. So what is the impact that you see from that one? You know, this, some of the shares have been seeing quite a downtrend in trade today.
Yeah, so basically on clean energy side, one has to be very, very selective. The companies who have some kind of edge, either in terms of technology or cost, I think those segments should be looked into. But the companies who are solely dependent on tax arbitrage or maybe a subsidy arbitrage, I think those companies will remain risky to invest into from a longer term period. So we'll be more inclined towards the companies who are supplying components in this renewable space, or the companies who are users, or maybe the you can say who are the beneficiaries of this trend, rather than investing to companies who are some sort of competing globally with Chinese or other countries where overnight things can change in terms of cost structure or tax structure. I think we'll be more inclined towards the companies who are not dependent on these kind of tax arbitrage.
All right, we did talk about some of the sectors that you are bullish on, Mr. Mittal, but which sectors are not, are you comfortable with at this point in time, where you would like to advise our investors to stay away for some time now?
So at this point in time, considering the global growth uncertainty, so we are not so much sure of the global cyclicals. So the companies who are exposed globally to the global economic activity, and they are into commodity cycles kind of things. So we'll be avoiding those kind of space, and we'll be more inclined towards domestic focused companies or even export oriented companies who are basically have some edge in terms of technology or cost advantage and all these things. But global cyclicals will avoid at this point in time.
All right, a focus on domestic focused companies then. That's the view coming in from Mr. Mittal. Thank you so much, Mr. Mittal, for joining us. Great chatting with you.
Yeah, thank you.
All right, let's